Thank goodness that's over. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market report for Friday, the 31st of August. And it's the last trading day of the month, and judging by the volume this month, it hasn't been a particularly great month for anyone. Looks like stocks are going to close out August with a 2% gain on the S&P 500. More interestingly, the gold market is going to be up over 4% for August. It seems as though the markets are saying, in gold we trust, and not Bernanke. When everyone returns from their Labor Day weekend, we expect the markets to have more volume and activity. At the moment, August will go down in the books as one of the lowest volume months ever. When we return in September, the markets will be fixated on the ECB and what Mario Draghi and Europe may or may not do. That's one of the reasons I love the markets. They're never boring. To all our American members and readers, enjoy a safe and happy Labor Day weekend. If you have any specific questions about the markets, or if you'd like to post your questions here, and we'll do our very best to get on the next broadcast, support@ino.com. Just post your questions there. Now let's go to the charts and our trade triangles and see what's going on in the market. We had some major signals today, so let's take a look at those right now. So we'll start off with the S&P 500, which is positive today. It started off on a little bit of a negative tone, but it really, even though it rallied, it's still not exactly robust. And I think that's the important thing to remember. And I think we could very, very well go higher or lower on the session as we go through here. But I think it's important to note that we do have some resistance above that's beginning to build up above this market over the 410 up to the 420 level. And I think that remains to be seen if that continues. But we were a little bit oversold with yesterday's activity. We did close below 1400, which was a psychological barrier. Now, having said that, we could quite easily, given these thin volume markets, come down and trade below 1400 again today. So let's see what happens. We're approximately 1 o'clock Eastern Standard Time. We have several more hours left to trade, so let's see how that plays out. Moving along to the Dow. The Dow has been the laggard in all these indexes. We have a minus 85 score, which means everything is still pretty much negative there. And if we close, I would say, under the 13,000 level today, Friday, the end of the month, I think that'll be not augur too well for the coming week and the coming month, because September can be notoriously difficult. And also, if you remember, last 2008, we had a terrible, terrible September. So we don't want to see a replay of that. But let's see how the market looks like. It's making a little bit of a turn, trying to turn down. We were oversold. It's come back up. Let's see how it plays out next week. On the NASDAQ is just sort of hanging in there. It's really, it's flat. The trend is up, the monthly and the weekly trends are up, which are the big ones we have to pay attention to. So let's play it like that for the moment, but let's watch today's close very, very carefully. That's what I would be up against. Because the reason I say watch the close today is because people are going to go home long or short this market over the weekend, and depending on how we close could be dictating how that plays out. Now, this is crude oil. Crude oil is closing out the month on a positive note. A little bit higher for the week, but nonetheless on a positive note for the month. And that doesn't augur too well for inflation. We'll be talking about that in just a little bit. But here we are. We are sort of flat for the week pretty much. And I have to go with the monthly, the long-term monthly. If you're an intermediate-term trader, which we recommend in trading futures, which this would be, you want to be trading on the weeklies and the dailies. And, of course, on those aspects, you'd be long today. So let's go to our next market. And this is the euro. Obviously, we've talked about the 126 being resistance. We got up there today. It's come back down. This is all going to depend on what happens with Mario Draghi, Monti, and Merkel, and Hollande from France. All these players are going to come in. Is Spain going to borrow money? Are they going to keep the banks good? It's a gazillion questions. All of them don't add up to being good, in my opinion, for the market. You can't just sweep all this huge, huge amount of debt under the rug. It's not like the States where you have a central bank. You have all these different countries, different politics, different cultures. It is a quagmire over there. So I think the key thing today is going to be the 125 level. If we go below that, I think it's unlikely will happen, but you never know in these markets. Then I think we'll see this market under pressure. I still think we're going to see this market move lower. We have a plus 60, which is the trading range, indicating further sideways action and potentially a move down. So the longer term, we have the monthly in a negative mode. And you can see on the short term, the dailies are up, but not by very much. So let's go to our next market, and that's the gold. And gold, you can see, has put in a very strong performance today. We've been talking about this all week, about don't miss this gold market. And the reason we've been saying that is because, one, we have all of our trade triangles in place. Two, we have a huge energy field here, which we've talked about before, energy fields. And that's what they are right here. There's a huge energy field. We basically broke out pretty much right there. And you've got this was a continuation pattern. We talked about don't be fooled by this little pullback. We thought the market would come back up. Boom, it has. I think we'll be seeing this market really going higher for the next 9 months. Yep, that's what we're looking for. 9 months up in gold based on our cyclic work. If we're correct, then we're probably going to challenge the all-time highs and possibly hit the magical $2,000 an ounce. So let's see how that plays out. Nonetheless, very bullish action, up 4% for the month. We're up for the week as well. Obviously, very, very creative and positive action in the gold market. So really pay attention to that today. So let's go to our next market. Let's clear the screen off first and go to our next market, and that's going to be, excuse me, the copper market. The copper market really isn't doing anything dramatic. I mean, you can see it's just bopping around here in this sort of very kind of malaise of trading, really not doing very much of anything. So there's the plan, 355 resistance on the top side, really the 330 on the downside. That's it. Until you broke out of that range, you're pretty much going to see more of this action. And what's interesting today, it's really not up given the fact the stock market's up. So it's a little bit flat for the, it's actually, I think copper's down for the week. And I think one of the things we like to look at, the weekly charts, and we'll try and go through this a little later today if we have the time. So let's clear the screen off and go to our next market. And the next market we're going to go to is going to be the silver market. Now, silver's acted very, very, very well. And guess what? This is the market I was telling you about earlier. We now have a confirmed bull market in silver. There's the, we clicked in today. There's the monthly triangle right there. It just came in at 31.31. The market's at 31.39, so you have a chance to get in pretty much at the same price. This is the, we talked about this. We thought this is going to happen. We really want to keep our powder dry until it happened. Well, it happened today. And what you have, again, like the gold market, you have this very large energy field, which is really, 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 really capable of taking this market much higher. So really pay attention to that. I would think the next really strong level of resistance is going to be 32 and 33. And I think if we can get over there, then we'll be looking at probably much higher levels. It's not much above the market, but I think this is going to probably follow gold and be up for the next 9 months. So I think that's going to go higher. Silver's going to go higher. And I think the reason it's going to go higher is because of inflation. We've been talking about this. No one's talking about this really in a big way. And I think that's going to be a really big kicker here where our dollars get lower, discounted, and the metals, people go into hard assets. So let's clear the screen and go to our next market. And this is the Reuters-Jeffries CRB index. Excuse me. This is our #1 inflation indicator. And as you can see, we've been really positive on this market from quite some time. Let me take the dailies off because you really want to trade this one from the monthly aspect. And that kicked in actually over a week ago. And it looks like it wants to go higher. Now, the big level there to watch, in our opinion, in our work, is going to be the 320 level. This may be the first stumbling block for this market. And that's a long-term trend line that comes in pretty much around there. So I think you want to watch this level very carefully. But nonetheless, This is primed up. We are a little bit overbought, but nonetheless, the market really seems to like it wants to go higher. So let's clear the screen, and let's do something we like to do on Fridays if we have the time, and we certainly seem to have the time today. Let's look at these markets just on a purely weekly basis, and let's start from the top again and zip through these. So we're going to look starting off the S&P 500. So we'll just pull up our daily chart, and we put that in our weekly chart. And you can see now for the week, it looks as like we're a little bit lower for the week. We were higher earlier, but nonetheless, it looks as though we're starting to roll over a little bit here. And yep, that's it looks a little bit negative. And on the monthlies, we were, let's see, well, the monthlies were certainly up. We're up. We talked about being up about 2%, 1.9%, because we gave that quote a little earlier. But for the week, it looks like we may be on a little bit of a defensive note for the week. So let's just see how that plays out. Let's just scope this out just a little bit more. Yeah, so let's go to our next market. That's going to be the Dow Jones. And Dow is certainly negative on the week. And that was going to be, if we close down here, that'll be the lowest close in probably about 4 or 5 weeks. So something to look at anyway. On the NASDAQ rather, we're looking at something looks a little bit flatter, but a little bit negative for the week. Certainly, it's going to close lower than we opened the week, and we have a plus 85, which is of course a positive mode. But we're also up against this weekly Dutch and trade channels because we keep channels on both daily, weekly, and monthly. We think it's very important, as we do with our Williams percent R, and you can see we're in an overbought condition here. So let's go to our next market, crude oil. Crude oil basically pretty much flat for the week. We closed last week at 96.07. We're 96.24, so not a lot of activity there. But if we look at this on a monthly basis, boom, we're up a lot. We're up over 9% for the month, and that's a big move in any commodity. So let's go to the euro. The euro looks to be higher for the month. That's up over 2%. That's a big move in the currency markets. However, for the week, I think we're just a little bit higher. And we are, let's see, we're up 0.39%. Not a big deal, but nonetheless for the month, big changes. So moving along on the gold spot, you can see the gold spot's right up against the top of the weekly Donchian trade channel. That may be enough to stop it, at least for the moment, but nonetheless, the market is up quite a bit for the week, actually only 1%. But for the month, and I think this is the one thing to look at, and that is right here, is for the month, we're up almost 4.3% for the month. So looking very good on silver and on gold. So let's go to the the copper market, pretty much flat there, not very interesting. On the silver, we're up actually astounding 12.8%, 12.3% on silver. Very good close. You can see we have to go all the way back. That's probably the highest close since, let's see here, since April or March of this year. So it's really cranking it out. So on the CRB index, again, this is the third month in a row we're closing higher. It's telling you, the market's telling you inflation is on the way. So hey, that's the key thing to remember. This is going to be the highest close, and we're currently trading at 308. This is going to be the highest close 1, 2, 3, 4, 5 months, 6 months. So definitely something to look at. And I'm sure that the Fed hasn't paid that much attention to this because they just keep printing money, which means inflation is coming, guys. You've got to be prepared for that. Hey, this is Adam Hewison. It's been a great week. We hope you've had a good week too in the markets, and I hope we've helped you in any way we can. And also want to wish all of our American members and also American readers a very happy, safe, and enjoyable weekend with your family, your Labor Day weekend. And we'll be back on Monday. And till then, have a great weekend.